Danielle, what was your biggest takeaway yesterday?
Powell had a lot to say, but he said it so quickly a lot of people missed it. 8 press conferences a year are on the table. He said he's open to the idea of it, but he wasn't going to shock markets by signaling it yesterday in the press conference. Quantitative tightening is off of the table, period. And as far as any projections that are based on models that he clearly does not have much faith in, if you're looking out to 2020, you need to look somewhere else, because a lot can change between here and 2020, which is what he said.
So, Vince, sorry, finish up, Danielle.
No, I'm just saying that he's saying, watch what the data do. We're not going to say we're data dependent anymore. We're truly data dependent.
Versus model dependent. Which
is a key
distinction.
Yes.
So, Vince, what happened to the dollar?
Well, first of all, bang on. That's a perfect point. And if you've seen the data in the last couple of months, they actually hasn't been as good as people have thought. So that's probably why he's leaning in that direction a little bit. The dollar got wagged by the algos a little bit. In the outset of it, we saw the dollar improve because people were looking at the 2019-20 dot plots going up. So they saw the steepness of the curve potentially, the Fed syncing up, rates tightening, and then everyone looked at the 2018 forecast, or the machines looked at the 2018 forecast and said, wait a minute, things aren't really that good. So the dollar did a quick flip, and we ended up back down on the day, and then we had trade come in on top of that, which sunk it completely, basically.
Yep. And in terms of the data that they're looking at, we have a full screen that kind of shows what their projections are for GDP, the unemployment rate, and core inflation. Something doesn't make sense here. So you wind up having unemployment rate continuing to fall, core PCE kind of breaking 2%, and you wind up having growth peaking this year. What does not smell right to you, Danielle?
The boogeyman yesterday was inflation, because that's what they really didn't touch in the outlook. And the thing is, though, and I think that Jay Powell pays attention, even if you're not going to seasonally, even better if you're not going to be able to seasonally adjust the data. But he's going to pay attention to the fact that people are finding work at the quickest pace since May of 2009. He's going to see that people who have left their job voluntarily and are out of work for 5 weeks or less time, that 42% of them are finding work. Wage inflation is going to build, and what he told us yesterday is, if the data change, I'll change with it. So what I looked at yesterday was not the increase to the outlook for growth. It's the fact that they didn't touch inflation, but that will change, and he has said that will change.